conversation today. Samantha and Jessica will be available to answer any sort of technical questions if you're running into any issues as well. And lastly, the session is going to be recorded. So now to the main event. We are so pleased to have with us today Shane Murphy, the Chief Operating Officer at Ownr, which is a portfolio company of RBC Ventures, where he oversees the legal processes that serve thousands of Canadian entrepreneurs. Shane was previously co-founder of Founded Technologies, a legal tech startup that was acquired in 2020. And prior to starting his own company, Shane was a corporate and commercial lawyer practicing in Toronto. He holds law degrees from McGill University and a master's degree from the London School of Economics. Thanks so much for being here, Shane. I'll now turn it over to you and get us started. Thanks so much.
Great, thanks for that introduction, Noreen, and it's really good to be here with the Edge community. I'm just going to share my screen if you'll all bear with me for one moment. Okay, can someone mind confirming that you can see everything?
Yes, we can see it.
That all looks good. Okay, thank you. I just a full disclosure, I can't see the chat or anyone's video the way I'm doing this. So, but I really want to make this as useful as possible for everyone who's taking the time today. So, what I would really encourage you to do is please enter any questions into the chat, and then one of the members of the Edge team will gracefully interrupt me, and I'll address those questions. But I really do want to emphasize that let's take this time to make this a really useful, practical session for everyone. I'm really passionate about helping early stage entrepreneurs, and you've got me for the next 40 minutes or so. So you know, if there's something on your mind, if there's something that's not clear, let's drill down on it and make this as interactive as possible, despite the fact we're all working remotely and probably at home. So I don't need to introduce myself. Noreen did a great job of that. Former lawyer, but I guess what I really want to emphasize is I am an entrepreneur at heart. I built a company which was then acquired by RBC. So I know the life cycle of a small business, and I know the struggles of starting a business from firsthand experience, which is one of the reasons why I love helping out groups like this. So if there's anything from my personal experience in growing and selling a company, we can talk about that too. But before I get into the substance of kind of the legal stuff we're going to talk about, just want to point out the platform that I've built with my team and that we're working on today. It's called Ownr, OWNR. Please check out our website at ownr.co, not com.co. What we are is, we call it a legal automation platform, but what that really means is we're a place where entrepreneurs can get a small business incorporated, registered, set up for success in a way that's really affordable and easy to do online. In my previous life as a lawyer, I know it can be slow and expensive to work with a lawyer. So we've tried to take that experience of working with a lawyer, but allowing you to do it yourself through technology. So you don't have a lawyer who's going to work with you on Ownr, but we have sort of a question and answer type interface that allows you to get the same kind of work done like registering a business, but you'll be doing it yourself through the help of our technology. So at the end, we do have a discount and a promo code for Edge community members. So I'll give that out at the end of the presentation. But just before I dive into it, I just wanted to point it out that Ownr is really a great resource. It is run by RBC's venture program, but it comes out of the real hearts and minds of entrepreneurs who we built it as a separate company and then have integrated it into the bank. So that's just my little blurb on what I do day to day. Let's, without further ado, dive into what we're really here to talk about today, which is business structuring. And a corporation is just one of many business structures. I think we're really putting the emphasis on incorporating today as in terms of a topic, but we're also really, what I want you to think about is incorporating right for me, and at what time in my entrepreneurial journey is the right time to incorporate. So Canadian law, really simple for you, allows for 3 different types of business structures. Different countries have different ways of doing this. And if you hear about a different structure, you're probably hearing about something from the US. In Canada, we keep it nice and simple in that if you're operating a business for profit, that's the key thing. We're only here talking about businesses that are in it to make a profit. We're not talking about nonprofits or charities or anything like that. But if you're in it to make a living for yourself, and running a business to make money, you are going to be legally either a sole proprietor, a partnership, or a corporation. So let me walk you through these three structures quickly, and then we'll talk about which is the right one for you at which time. So starting with a sole proprietorship. A sole proprietorship is a simple business structure because it's just you. You wake up one day and you start a business and you're making business income. You don't have to do anything else in order to be a sole proprietor. The one thing, it's my second point under simple, is name registration. So if you want to operate a business using a different name, not just your personal name, you need to register that name with the provincial government and get what's called a master business license. That name registration is very simple. You can also do it through Ownr for less than $100, and it will give you credits for that and everything like that. But it doesn't create a legal difference between yourself as a person and your business. And I'll discuss that separation between personal and business in a minute. But what I really want to emphasize here is just all you're doing when you're operating as a sole proprietor is you're registering a business name, and that there's no real complexity around share ownership, government filings, continuity, and everything like that. That's going to come down the line when we look at the advantages of incorporating. So I don't want to go into too much more detail. Just think of a sole proprietor as you as one person operating a business. The second business structure in Canada is a partnership. And a partnership really just means more than one person working together to make a profit. So this could be any two people or more who don't incorporate their business but are running it together. So they're combining their financial resources and deciding to try to operate the business together. And when you're running a partnership, you need something called a partnership agreement. You need something preferably in writing with detail saying, well, how are we going to separate the profits of the business? Is this a 50-50 partnership? That's one option, but you could have a partnership where one partner takes 90% of the profits because they're doing 90% of the work, or then the other person is doing less work. The important thing with a partnership is just to get that in writing so there's clarity. A lot of disputes can come out of this because it's unclear as to who owns what in a partnership, who's expecting what sort of revenue or profit in return. So if you're operating a business with someone else, this is the simplest advice for you. If you're coming together with someone and operating a business and you're not incorporating that business, you need to sit down and have that conversation about who owns the equipment, who owns that, because it's going to be someone, or you can own it jointly. But to clarify any misunderstandings, get that in writing and then continue on. Most partnerships aren't built to last long term. And what I mean by that is if you're working with someone else to grow a business, you'll probably want to incorporate that business at some time in the future. So partnerships often work for seasonal businesses, short-term businesses. If you're operating a business for one summer with someone else, you might not want to go through the process of incorporating that business and the formalities around incorporating. So a partnership would work for that short duration of time. But if it's you and a partner, long-term, looking to build a business, you probably want to incorporate that at some point. So that really dives into the heart of the topic in front of us today. And that is, what is a corporation? What are the advantages of incorporating? And is incorporating a business right for you? So I'll try to walk through some of the advantages here simply. And so I just want everyone to get a good sense of when you set up a corporation is a separate legal entity. A corporation is technically, under the law, a person. So when you incorporate a business, this corporation you've created has certain rights. It can own property. It can open a bank account. It can do basically everything except vote or get a driver's license, that kind of thing. It's legally a person that is allowed to pay its own taxes and everything. So you own the corporation, but the corporation is what owns and operates your business. The advantages here are, well, there's several, but the first one is transferability of ownership, the ability to take a portion of your corporation and sell it or give it to someone else and have that change hands over time. A corporation is broken into units called shares. So a share is just represents owning a piece of a corporation. And a corporation can have 10 million shares, it can have 10 shares. It doesn't matter how many shares, but it's the idea that a corporation can be cut up into various pieces. You know, you can slice the pie in different ways and sell pieces of that corporation or give it to others so they all have an ownership interest in the corporation. The shares, that ownership structure, is what increases in value as the business grows. So this gives you the ability to raise money, which is a hugely important thing for an early stage small business. You need to somehow capitalize or get money into the company. So one very common way of doing that is you sell shares to investors who won't necessarily come in and operate your business for you, but they, in exchange for owning a piece of your company and a piece of the future profits, will give you seed capital, allowing you to build the business. So that's really one of the reasons to incorporate early, is if you're looking for financing, a corporation is a much better structure for doing that than a sole proprietorship, where again, it's just you can't sell a piece of you. It gets far more complicated in terms of what you would give an investor in return for their money. So backing up again, the last point to mention is continuous existence. This sounds obvious, but of course, people die and people, they can't operate a business forever. A corporation can be passed on from generation to generation. It can be passed on to your children or your junior employee who will continue to operate it for you. Sole proprietorships really, they're so centered on the individual that you can't plan for them to exist 100 years and more in the future, in the way a corporation can always be assumed it will continue to operate unless it, of course, goes out of business and you shut it down. The disadvantages of incorporating are often overstated. There are some costs to setting up a corporation. I would look at Ownr, we can do it for less than $500 plus discounts for Edge members, plus perks if you open a bank account. You can do it for quite cheaply. So there is still a cost. The second thing is that there's paperwork and tax filings that need to be done. Because a corporation is its own person, you're now going to end up filing taxes twice when you incorporate your business. You file taxes as a person, as you always have done, and your corporation will file taxes related to the revenues of the business, paying taxes on the profits. And then that just leads to ongoing paperwork. We have some tools on Ownr to help you with the ongoing paperwork, not necessarily the tax side of things, but some of the, we call it corporate compliance, to use the kind of legal term for it, but ongoing paperwork that you need to do in exchange for getting the benefits of incorporating. So usually at around this point in the presentation, someone will ask, well, okay, so when is the right time for me to incorporate? And it comes down to two factors. These are really the things that push people to incorporate. I mentioned investment and raising money. That's all totally true, but those could be specific to certain industries that need sort of seed financing. For the most part, it's a question of liability and taxes. So let me break down each of these, probably a little more emphasis on liability because this is more of the legal area versus accounting. But liability really just means business risk. I can't emphasize enough how risky it is to run a business, which is one more reason why I like working with entrepreneurs, because they're inherently, they have to be risk takers. And when you're a risk taker, you at least have to manage your risk intelligently. So when you are operating a business, you have to ask yourself, what sort of business risk am I encountering here? This is separate than your personal financial risk and everything like that, but what risk is inherent to the business model you are operating under? And this sort of wave of liability here is a bit of a spectrum with high risk businesses and low risk businesses. So let me give you an example here. At the high end, we have moving services as an example. I'll take the middle one. So if I'm going to start a moving business, it means I'm going to be hiring some employees. We're going to be entering people's homes, moving around things. This is a risky business because at some point, something's going to get broken. There's going to be property damage. We're going to put a hole in a wall or break, grandma's old vase or something like that. Things are going to get broken. People are going to get hurt. Sad reality. No matter how careful you are, someone's going to pull, throw their back out or something like that. So there's risk in this business. So with that much risk, incorporating allows you to mitigate some of the risk from day one. So when there's property damage or when something goes wrong in my moving business, there's a very high chance of the business getting sued. If I'm a sole proprietor, the person would sue me as an individual because I'm a sole proprietor. There's nothing else with my business except me. But if I'm incorporated, that person would sue the corporation, meaning they would be looking to recover money from the corporation. This gives me the advantage as an entrepreneur because they can only look at what the corporation owns to recover on that money. So they can't look at forcing me to sell my car, my house, anything else I own is sort of off limits. Those are my personal assets. The business assets are owned by the corporation, and those can be used to recover money on a debt. So when I talk about liability and business risk, incorporating draws a line between my personal assets and my business assets, and my personal assets are protected. So that's why a high risk business means you want that protection before you even start operating. Day one, incorporate that high risk business. Let me swing down to the other end of the spectrum here. If I'm going to be a marketing consultant, say I'm going to, I'll go into a company and help them with their Google Ads strategy and their marketing materials. There's risk to that, sure, but the nature of the risk and kind of the severity of it is a lot less than it is for a moving company. So with a marketing consultant, I'd probably say, don't incorporate day one. Wait and see that if your business model makes sense. Make a decision as to whether you're going to pursue this business for your livelihood. And at that point, you can incorporate. But there's the lower level of risk means you can operate a little while before you incorporate without putting yourself at an unreasonable amount of risk. So hopefully that makes sense. And I would encourage everyone here to kind of do this mental exercise, thinking, well, where does my business land on a spectrum of risk? And consider your plans to incorporate accordingly. Now, apart from liability, the other thing that really pushes people to incorporate are issues about taxes. And I'm not an accountant or a tax advisor or a tax expert, so I'll keep this fairly high level. But in Canada, we have two different tax rates. We have the tax rate paid by people, real people, humans who, like you and me, who file their taxes. But there's also a corporate tax rate paid by corporations. And that corporate tax rate is lower than the personal tax rate. So when I'm operating as a corporation, my corporation will first pay taxes at the low corporate tax rate. And any money that I can kind of keep inside the corporation or keep in that corporate bank account for business expenses, for paying employees, that will be taxed at the lower amount. So there's savings there because I'm not paying the same amount I would have paid as a sole proprietor. I'm saving money that I can reinvest in the company for all my business expenses. You're only going to see that tax savings, though, if you can keep some money in the corporation. If you need every dollar you make right now in order to support yourself and your livelihood, then you'll take it all out and you'll pay the personal tax rate on that money. So this will kick in at the time where you're thinking of reinvesting money into the business. And the final thing I wanted to bring up with the tax advantages of incorporating is if you end up selling your business, this goes back to the idea of shares. Someone wants to buy all the shares of the business, they want ownership of it, then there's something called the capital gains exemption in Canada. And that allows you as a small business owner to sell your shares in your company without paying taxes on that money. And this is sort of like, you can debate whether this is a good idea or a bad idea, but as a small business owner, this can lead to huge tax savings. A lot of people want to build up their business and then retire someday by selling it. This is a way you can save a lot of money by taking advantage of that capital gains exemption, which is only available to small business owners who sell their shares in a company that they have built. But again, only makes sense if you have shares, and without a corporation, you don't have shares. And I'll just throw in a quick reminder here. I'm 100% open to taking questions, but if there's no questions, I'm just going to keep on going and going. But dive in and ask there. Yes.
We actually do have a question here in the chat. It
Great.
says, so business name registration, when should we do that? What's the best way to go about to do that? And would we be able to get a copy of this deck? So there's three questions.
Yes, last question first. Yeah, last one first. Absolutely. Happy to share the deck. We'll arrange that with the Edge team. And they can hopefully find a way to send it out. But yes, I'm happy to share that. Business name registration. So yes, business name registration is really, there's exceptions, but we're really talking about the sole proprietor structure. So as I said, the minute you operate under a name that's different than your personal name, you need to register that business name as a sole proprietor. So that's something we can help you with at Ownr. Again, this isn't a sales pitch. We've made it probably the quickest and most cost-effective way of getting your name registered by just doing it on ownr.co. You can also do it directly with the government. Just search Ontario business name registration or master business license. There's a direct portal with the provincial government you can do it at. But with Ownr, we have effectively the same price, and you get some perks by signing up for Ownr too. So we'd recommend that. Just keep in mind, you're then operating as a sole proprietor. You're not incorporating. That might work well for you at this stage of your business, but just remember that I've seen people get confused once they get that name registered. They're like, oh, I don't need to incorporate. No, it's totally different. It's just reserving that business name for you. But if you're operating as a sole proprietor, you need to get it done anyway. So anyway, thanks for the question. Really, really happy to take any others. I did want to emphasize something about this. This is almost a similar point about how to incorporate. Again, at Ownr, we do all of this, but there's some misconceptions around what incorporating involves. It's a two-step process. Step one involves filing documents with the government. Pretty simple process, actually. You file something called the Articles of Incorporation, standard government form. They send you back a certificate of incorporation, which is like literally a birth certificate that says, congratulations, you have a corporation. That's its name. Now it can operate business. It's a legal person. Then the government checks out of the process. But the government doesn't care about step two, even though it's legally required. So I should rephrase that. The government requires you to do step two, but won't do it for you. And step two is organizing the company and figuring out who owns the thing and how it's run. So you need, as a corporation, you need things called corporate bylaws, which are like a rule book for how decisions are made. You need all these shareholder registers, resolutions. These are really, it's just a fancy way of saying, who owns the company, who are the shareholders. Government won't do this for you. As a lawyer, back when I was a lawyer, this is where I would spend my time. But it's, to be frank, it's not the most complicated thing. And on Ownr, we kind of walk you through the process of creating these documents for yourself by inputting the relevant information. So I just want you to know, if you have incorporated and you've just gone to the government site and got it done, you're only halfway there, and this leads to huge problems in the future if you don't have these sort of corporate records ready to go to prove that you are the owner of your corporation. Big problems that arise from that. Okay, so I think this is kind of my last big point on incorporating and the process. Um, I think this is a good point to emphasize. There are all kinds of positions within a corporation. There are officers, directors, shareholders. You need shares and a name and everything like that. But it can seem like a lot. What a lot of entrepreneurs don't realize is that the majority of corporations in Canada are just one person. So being a corporation has nothing to do with how large you are, how much money you're making. It's just a matter of taking advantage of those things like liability protection, tax benefits. It applies equally to a one-person corporation as it applies to, Google or Facebook or any massive global company. They're all corporations and they all have these roles, but it doesn't stop one person from getting the same advantages. So let me walk you through each of the roles in the corporation. And I think that might clarify what I'm talking about. So I'm going to do this in the opposite direction. I'm going to go right to left, but let's start with the officers. The officers are people like the president, vice president, secretary of the company, roles or titles that we're familiar with. But these are the people who are actually operating the corporation. So these are the executives who are responsible for the day-to-day operations. Those officers are appointed by directors. And directors are often what we refer to as the mind of the corporation, or we often hear about the board of directors. So directors are not necessarily involved on a day-to-day basis in operating the business, but they're there as oversight, looking at the direction of the company, making sure it's kind of all going in the way that they want it to, and making sure the officers are doing their jobs correctly in a way that satisfies them. But the directors are then accountable to the shareholders. The shareholders are as we've discussed, the owners of the corporation. So it all kind of leads back to the shareholders who are appointing the directors, who are appointing the officers to oversee the entire business. But back to my point about one person doing this, you can be one person and you are your corporation's officer. You're also the director and you're also the shareholder. That is the standard for corporations in Canada. Everything else is less common for bigger companies. So one person can fill all of these roles. My next point as we go to the left here is share structure. So when you set up your company and we do those organizational documents about who owns it, not all shareholders are the same. Each share will have various rights associated with it. So the most common example here is having voting shares and non-voting shares. When the shareholders vote, whether it's on who the directors are or some other issue with the company, the shareholders who have that are really in charge, you might not want everyone who owns a piece of the company to have that power to vote. In my old company, for example, we gave our employees non-voting shares because we wanted them to own a piece of the company, but we didn't necessarily want each employee to have a vote on how the business was run. It was still our baby, and we were making those decisions. So you can set up a share structure that suits your needs, whether it's voting or non-voting, or one type of voter gets 10 votes versus someone else who gets 1. You can have a lot of flexibility here, but it's up to you to decide what structure works best for you. And the last point kind of ties back into naming issues. Yes, you have to name your corporation. A lot of people even operate as a numbered company, which means legally your name is 1, 2, 3, 4, 5, 6 Canada Inc. But most people want to give their company an actual name. So there's a process for reserving a name. It's getting a little technical, but it's called the Nuance Search, which is just a report about business names in Canada. You have to think of something that's unique and hasn't yet been taken. But generally, this is part of building your brand, and it's not just a legal exercise. It's really thinking about how you want to present yourself to the public. I'm going to just give you one more point, and then I think I might wrap up. The last point isn't, again, not necessarily a legal one, but a point that I just think a lot of entrepreneurs don't think about early enough, and that is about registering for HST. You can do this as a sole proprietor or a corporation. It affects you either way. But the rule, or the magic number, is once you've received $30,000 in revenue, you don't have a choice. You need to register for HST and you need to pay HST to the government. But before $30,000, you have the option of not collecting HST or paying it. It's your choice. But there are advantages to registering early for HST because you can obtain credits, or you can obtain basically a refund of the HST you've spent building your business and get a check back from the government if you're not actually collecting HST at that time from your customers. So to give a plain example, if I'm setting up a restaurant, for example, opening a new restaurant, I've got all kinds of expenses. I've got to buy, kitchen equipment and supplies and everything. And every time I spend money, I'm paying HST on the stove I bought, or the pots and pans I'm buying. There's HST on all my expenses. But if I'm not receiving any money from my customers because I haven't opened the door yet, then I get a credit for all that HST that I'm paying when I'm not collecting any money from customers. So it's a great way to get a little bit of money back, but you can only do that if you've gone through the process of registering for HST. So give some thought to registering early for HST. Don't necessarily wait for that $30,000 mark where you have to, because at that point, you might have already spent a lot of money and you won't get credits retroactively paid back to you. So all that is kind of concluding my incorporation spiel. I do have some other slides, but they venture off into other topics where we probably don't have enough time to get into them in a lot of depth. So I'll just pause here and say, really, if there's any questions, or there were a couple that were sent to me in advance, which I can dig up too. But yeah, any questions at this point?
Shane, there was this one question that I wanted to ask, and if you could share your thoughts around it. For ventures, or for businesses that have a social impact or are thinking about impacts to social enterprises, does incorporation means something else for them? What are some of the considerations that they should have? What are some of the obligations, if there are any? So if you could share your thoughts.
Yeah, thanks for bringing that up. I think it's an area where I think the law could be clearer and could be better about this. As I said, in Canada, we only have those three options for businesses. So you're either sole proprietor, partnership, or corporation. There's no social enterprise category, so you need to sort of slot yourself into one. A social enterprise is still a for-profit business by most definitions. So you're not a not-for-profit, but you're setting out to have a social impact while also making a profit. And when I say a profit, I don't mean you're just going to set out to make billions of dollars and not care about anything. I mean, technically, if you're selling products and making money off it, you're making a profit. So whether you're aiming to be huge or happy being small and community oriented, you're still a for-profit enterprise. So most social enterprises will have the same thought process as I've kind of guided you through here. You can start your social enterprise as a sole proprietor, a partnership, or a corporation. And at some point, if you're doing this long term, you'll probably want to incorporate it when it seems like the time is right for you. So I think there is something we have called a B Corp, or a B corporation. And it's not actually a legal category. It's sort of a global movement, for lack of a better term. It's when corporations have been set up, but they've decided to put in their corporations articles, and basically in the constitution of the company, that it exists for a social purpose. So, if I back up to this slide where I was saying, officers report to directors who report to shareholders, a B Corp has been set up in a way where this still applies, but they're adding a different layer beyond shareholders, what they call stakeholders. stakeholders can be the environment around you, the community that you operate in, a broader set of interests than just shareholders who are looking for the company to make money. So you can set up a B Corp, and I think the cool thing about it is that it says this traditional hierarchy of officers, directors, shareholders isn't complete, and that you should look beyond shareholders and be accountable to, as I said, like accountable for your environmental impact, accountable to ensure there equity in your community generally. So the thing with B Corps is they're not a legal category. You're still a corporation legally, but you've amended your company or set it up in a way where you've added that stakeholder relationship side of it. So it's an emerging idea. I think it's super interesting, and a lot of people are doing it. But it's in terms of like what the government or the CRA is going to think, they're just going to say, fine, you're a corporation. What you've decided in terms of a B Corp or social enterprise is your choice. But you're still incorporated, and that's quite typical. You just don't have really a separate option for legally structuring. It's up to you to take that step to say we're a B Corp, or if we have another social enterprise goal, that can also be set up just between the people operating it and who you're accountable to. Does that clarify anything?
Yes, that does. Thank you so much, Shane. There's
Great.
another question that came in the chat. So Diana is asking, if I'm already a sole proprietor and I incorporate, will I need a new business name, or can I transfer sole proprietor name over to corporation?
Yeah, great question, because as a sole proprietor, one of the few things you own legally is that business name. So you want to keep it. You've probably invested some time. Maybe you've already got a website and everything up and running. No, you shouldn't need a new name. So there is a way of just taking your existing name and then incorporating it. So it is, a lot of people do switch from a sole proprietor to a corporation. So the only difference is that you need to inform the government when you're incorporating that you already own that business name as a sole proprietor, and you're switching it to a corporation. Happens all the time. Not hard to do, and no, you don't need a new name for sure.
Thank you. There's just one question that came in that I think I shared with you. It was from one of our members that sent in 3 questions. Which was about when is a good time for a startup in idea phase to register. And I thought if you had thoughts around it, I want to touch on that.
Yeah, I think the idea phase is probably one step before incorporating. I think once it really depends what you're doing in the idea stage. A lot of startups, their next step after they've got an idea is to raise some money. That's not uncommon at all. Once you've got an idea and a business plan, you're going to need to get some capital injected so you can start building out a product or hiring a team. So you can't raise that money until you're incorporated. So I would say if you are a typical tech venture startup type company, incorporate early on so you have that opportunity to raise funding. It's very difficult before you're incorporated to do that. And also in terms of ownership of intellectual property. Intellectual property was another thing I could have gone on for probably a couple of hours, but once you've built your website and you have your branding and everything, you want to protect it, and you want that owned by the corporation. So I would say tech ventures incorporate pretty early to have those sorts of additional considerations around money. I almost forgot to show this slide, which one of my colleagues put together, and I think it might be a little blurry, so I apologize for that. But what I do want to say is, apart from just thanks for having me, and this has been great. At Ownr, we do have a discount for all members. We'll get 20% off to any Ownr services, whether that's a business name registration for sole proprietorship or to incorporate. Happy to give everyone 20% off. So when these slides are circulated, there's a link that will take you there. And yeah, there's also probably a code which my colleague will provide to the team. So we'll send out these slides and we'll get everyone a discount code. So if you do want to go ahead and incorporate or just check out Ownr, that 20% off is there for you. So I think, unfortunately, this has really flown by, but we're running out of time here. But I don't know if there's maybe one more question, or we could also just end it here.
I had a quick question. I'm Jacob. And my business partner and I have a partnership, and it's a multi-vendor marketplace. So we get commission on every sale. So for HST, would we be charging our vendors the commission, or sorry, the HST on the money that we get from their sales?
Yeah, it's for online businesses. I think the HST system is a little bit outdated and broken, but if they are in Canada, they do. Internationally, you can't charge someone in the States HST. They're not a Canadian taxpayer. So for bookkeeping purposes, it becomes a bit of a nightmare. And ideally, you've got a payment system where it's identifying where people are coming from and charging them tax accordingly. Same issues apply for provincial tax. Assuming you're here in Ontario, you should be charging HST to people in Ontario. But if someone comes from BC, they don't pay HST. They should only be paying federal tax and not the component of HST, which is provincial. Headache. We figured out how to do it. We use Stripe as our payment processor. So, yeah. So I'm not totally dodging your question, but it's sort of one of these it depends issues. And but yes, when you're selling online, you still need to charge sales tax to your users. It's just a matter of figuring out how to do it for which category of user in your use case. But good question though, and good luck.
Thanks.
Maybe one more question if there's any, and then I'll hop off.
I think we have ran out of time for this session, but I just want to quickly say thank you so much, Shane, for doing this. The work that we do at Edge, it's part of what we want to do for our community, for our startups, is to bring like-minded, venture-friendly industry experts that not only helps them grow and thrive. We know that you took time off of your really busy schedule, and that too in a lunch hour. So we really, really appreciate it. And we really appreciate everyone for showing up and for your questions. We will be sharing a follow-up email with websites of Ownr, of Edge, how to sign up for Edge membership. And as Shane said, if you're an Edge member, you get 20% off Ownr. So it's a win-win. But thank you so much, everyone. And especially thank you so much, Shane, for being here with us today.
Yeah, that was a lot of fun. Thank you so much. And yeah, we'll be in touch with the slides.
Take care, everyone.